Hey there, welcome everybody. It's Walter here from FXJake. I just want to make sure that you can hear my my mic is coming through okay for everyone. Is that good enough for everyone? Excellent. Cool. Thanks, Rasika. Thanks, Carl. Thanks, Todd. Yep. Hey, Jeff. Cool. It sounds like everyone's pretty much freezing no matter where you are in the world. Even here in Australia where it's meant to be summer, we've had a blustery day, as Jeff can attest to. It's been quite windy today. Yeah. Rasika says it's been windy. Frank says it's hot in... Frank, are you in Thailand or Singapore? Yeah, Jeff's getting wet too. Luckily, we haven't had a whole lot of rain here in Sydney, but we did get a little bit earlier this morning. Frank's in Singapore. Okay. -2. A lot of people are, yeah, windy in North Sydney, says Andy. Yeah, it's windy on the northern beaches as well, Andy. All right. So, thanks a lot for taking time. Today was kind of a bit of a risk having it at this time. It works for me, of course, and those in Asia, it's not a bad time to have a webinar, but I know for some of you over in the United States, it's pretty late. And obviously for those of you in Scandinavia, no names, Frederick, it's probably quite early, I believe. It should be, what, like, I don't know, 5 in the morning or something like that? So, 4 in the morning, of course. Yeah, right, there you go. Never too late for a webinar, says Mike. Stefan says it's 4 a.m. Okay, all right, so what I want to do is get started for those of you that are, you know, in a weird time. And obviously, everyone who signs up for these webinars will get the recording link. If you don't get that link sent out, please email me. And I don't know, I know sometimes that happens, but normally, if you sign up for the webinar, you will get the link. Unless, for some reason, the email that you use to sign up for the webinar is not the one that you normally check or something like that. Then maybe something could go wrong. But today we're going to talk about trading with the trend and how we might do that without indicators. Is there a chart that, yeah, Bob says this is a great time. I agree. It's a great time for Australia and New Zealand, but it's sometime, you know, right now it's 10 p.m. in New York. So for some people it may be stretching it. But I love this time, obviously, in the afternoon here in Australia, and 4 p.m. for Bob. It's a great time, I think. But I thought I'd just try this time slot out and see how it does. Okay, so is there a chart that someone would like to look at? I don't want to just cherry pick. You know, I just pulled up the Euro 1 hour chart here, and I don't want to cherry pick examples here. If someone has a chart that you want to look at, we can do it because the principles apply. Really shouldn't matter the market, shouldn't matter the time frame. The same principles apply. Pound New Zealand, says Bob. Okay, Bob, you're the first one, so you're going to get the Pound New Zealand. And is there a time frame you'd like to look at? Which time frame would you like to look at? 1 hour, says Bob. Okay, there it is. I'm going to go ahead and make this blue and red template because I just prefer it. Wow, what a wicked chart. Okay. All right, so let's start with the basic concepts. Okay, well, first of all, let's look at this from an indicator point of view. Let's say that I'm an indicator trader, and I don't really have a problem with indicators. I just, you know, most of the time, the way that I'm going to usually trade is without indicators. So I've thrown up a moving average on here. That's a 21 exponential moving average, I believe. And I'm going to throw another one up here. Let's call it the 61. And let's make it green, like that. Okay, so if I had a system where I was looking for moving average crosses, as many of you are familiar, you know, moving average cross systems are great because they can often get you in on really big trends, like this one right here. You can see the market, you know, the moving average crossed here, so there would have been a sell signal somewhere around here. And then if you get out on the cross down here, you get out right around here, somewhere around here, let's say, and that would have been, it looks like that would have been good for about, on the 1 hour chart, Pound New Zealand, about 327 pips. So that's great. However, of course, you see over here where the market chops up, chops down, and gets really sloppy, it's not quite the same, is it? And you have, of course, another one over here where the market crossed here and then it crossed there. Now, I'm not here to talk about moving average cross systems, but what I want to do is compare what we might do from a naked point of view, naked Forex point of view, compared to what some traders might do with moving average crosses or other indicator-based systems. And I want to show you how we might actually be able to use naked principles for our trading and still get in on trends and still have concrete entry and exit rules on and trade it as a trend trader. Is my voice breaking off? How's the sound? Is it okay? Okay. Sounds great, says Mike. Okay. Sorry about that, Jim. Jim was talking about the sound. Okay. Could be your connection, Jim. It could be. I'm not sure. Rupert says it's good too. Okay, thanks. All right, so these are 21. This is the 50. No, this is 61 moving average and the 21 moving average. Now they're not. That's not important, and I'm not gonna. I just pulled these out of thin air. I had no reason why to pull them out other than it's just an example of what sometimes happens. Now, what I want to talk about now is, how could we trade the trend and get in on the trend without using indicators? Okay, so this is what and this is how. Robert, you don't hear sound either? Does everyone hear me? Yep. Okay. All right. Sorry, Robert. You might have to. Maybe your speakers or something. Todd says what? Yeah. Okay. All right. I'm sorry, Robert, but it's fine. It should work. Good advice, actually. That's good advice. I'm going to send this out, Stan. Thank you. There. Okay. All right, so this is the pound New Zealand. Now, let's say we take off the indicators and we say, is there a way for us to identify when the market is trending? The easiest way to do this, and to me, I would say, looking at this chart, I would say this is not a trending market right now. In fact, I wouldn't even be interested in trend trading this market unless it broke one of these two zones here. You can see I've drawn one down here at 87.60, 1.8760, and one up here at 1.8997. We can just go ahead and call that 90. So if the market breaks 1.90, higher than 1.90, or breaks lower than 1.8760, then I might be interested in a trend trade. Why do I think that this is important for it to break? Well, because it's boxed up in this area. And you can see that the market historically has respected this level over here at 1.90. So we've found support, 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 resistance, 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 and resistance recently. So for me, if this market stays in this box, it's not trending. It's just going up and going down, going up and going down. It's not going anywhere. So I wouldn't be able to use any of these strategies on this chart right now. Now, if the market breaks lower, okay, and then comes up and tags this level here at 87.60 and prints a nice bearish candle, I'd be interested in a sell trade. Likewise, if the market breaks higher, comes back down and tags this 1.90 level with a bullish candle, then I'd be interested in seeing if it's going to start a bullish trend. Now let me show you what these look like and how we can identify them. Most of the time, the market's actually doing what it's doing right here. It's not really moving, okay? Mike, the candle needs to get outside the box, exactly. Most of the time you're seeing the market chop down, chop up, chop down, chop up like this. Kind of like it did over here as well. The market did the same thing over here. But over here you can see we have a nice extended trend. Now what I want to talk about is what is the structure of this trend here. And we could make the case that once over here, the same sort of deal. The market was in this choppy box on the 1 hour pound New Zealand, and then it broke out of that, it actually gapped lower, came back up, touched the edge of the box here, and then printed a bearish candle. That's kind of what I'm talking about right now when I say if the current market breaks lower and prints a bearish candle. This is what I would call a bearish candle right here. This big, giant red candle closes down near the low. But what's interesting to me is not this breakout, but the structure of the market. In other words, how do I know the market's trending? I would say that once the market printed this candle right here, let me identify it, it was pretty clear that it was trending. And here's why. First of all, we know that we were in consolidation mode. Then we see the breakout, and we want to see confirmation of that breakout, and we get that with the last kiss right here on the edge of the box. The market starts trading lower. Now the question here becomes, is this move from this low to this high, is this just a simple retrace move, or is it a reversal, right? And how do we know if it's a reversal or a retrace? Well, the simplest way, and this is long-standing, old-school trader, sort of wisdom, is that if the market keeps making lower lows and lower highs, you're in a downtrend, right? And that's all well and good. And that's obviously true here because this little kangaroo tail here was not able to get above this high here. So that tells us we're in a downtrend, right? Frederick says you don't use the higher time frame to get a trend. Well, obviously that's a great point, Frederick. And you can do that, obviously. But I'm just going to focus on one time frame for this webinar, and the only reason I say that is because I just don't want to complicate things. But you're absolutely right. What Frederick is referring to, obviously, is the principle that a lot of traders use, which is once you identify a higher time frame trend, then you would, let's say I look at the 4-hour pound New Zealand or the daily pound New Zealand, and I see it's in a downtrend. Then I say, okay, now I can start trading it on the 1 hour with sell trades or whatever. And that's obviously brilliant. It's a great way to do this. But for the purpose of this webinar, all I really want to do is interpret the one time frame that we're trading. But obviously it makes sense it's great advice what Frederick is talking about. Absolutely. Okay, so now my question is, the market broke lower here, and it starts coming up here. So now the question is this a reversal? Is the market going to keep going higher, or is this just a retrace move? Now, we get our answer here once the market trades lower with this bearish candle. Why do I say that? Because basically the market topped out over here at this high. It didn't make a higher high here. It made a lower high. The local high over here was at 95.68. The high on this kangaroo tail was at 95.37. So it was 31 pips lower. So it didn't make a higher high. Now the question becomes, is it going to resume the downward momentum? And with this red candle here, we know the answer. This is what we see. We often see when we are watching the market trend trade, or when the market's trending. This is what we see. This happens all the time, which is basically this basic move where the market takes a strong trending move and then a retracement. Strong trending move and then a retracement. And you'll see this happening over and over again on many, many time frames. Now, over here, we didn't have strong trending move and retracement. We had a burst up and a burst down, a burst up and a burst down. So this is consolidation mode. Depending on who you talk to, most traders will tell you the market's consolidating between 50 and 80% of the time. It really depends on who you talk to. But basically, most people will agree that the majority of the time, at least 50 to 80% of the time, the market is doing what it did right here. And in fact, remember, right now, we've got the same thing going on. This is the current chart, and we have the same thing going on here. Choppy, choppy market. But if we go back, we can see that the market does, in fact, break out and make this trend. So this is there's two phases here that are important. The first is this phase right here, which is the strong trending move. And let me go ahead and make this gray so it shows up for you like that. That's the strong trending move right there. Then we get the retrace move, and the retrace move is right here. Whoops. This is the retrace move. And you will see this happen over and over again. Here's another deal right here. Here's a strong trending move down here. And then our retracement is actually right here. This is a very weak retracement, especially considering, the first one here. So that tells us, okay, once we get this big bearish candle once again and breaks lower, we say, okay, the retracement's over and we're back into our strong trending move right here. And then we get our retracement right here. Now this retracement lasted a little bit longer, but basically this was the low that it had to break, and you can see it broke it right here with this red candle here. Then we get another trending move. Whoops. We get another trending move here, and then our retracement, which was very, very quick right here. Whoops. I gotta make this a little tinier, like that. The retracement was actually just that. Actually, you could count it like this. Retracement is just when it goes sideways and or reverses a bit. And then we get another burst down lower, and it finally comes down here, hits our significant level of support, and then goes up. And then it goes back into no man's land, choppy, 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 right? So the question becomes, how do we trade these market patterns? You'll see it over and over again. You'll see it on markets, on all markets. We look at other. I'm looking at the pound New Zealand because that's what the Bob wanted. But let's see who else. Euro yen. Rupert wanted to see the euro yen. Okay, well here's the euro yen. It's under Forex majors and it's right here. Here's the euro yen. I'm going to make it red and blue. Do we have the same thing going on here? Yes, we do. We have, on the 1 hour euro yen chart, we have a burst up. We have little tiny retracement here. Retracement here, consolidation. Another burst up. Consolidation, retracement, burst up. That's what we see over and over again in strong trending markets. Here it again. Burst up, retracement. Burst up, retracement. Burst up, a little bit of retracement, flatlining, then it goes up again. Comes back down. This actually looks a lot like the daily chart on the euro yen. If you look at this move right here and this, that looks like the daily setup, the daily chart. Goes up, retracement, burst up, retracement, burst up. Now it's starting to roll over. We'll talk about how we can find when, define when the market's rolling over. What were the other charts that someone wanted to look at? I think Aussie dollar. Okay. We had a request for the Aussie dollar. Let's do that. Here's the Aussie dollar. I mean, we don't have to even use the 1 hour. We can use 4 hour, whatever. If I go to my blue and red template, what do I see here on the 4 hour chart? Well, I don't really see much of a trend now. We're definitely in consolidation mode here. But when we get our strong trending markets, here's a down move, retracement, down move, retracement, down move, up, reversal. Okay, now we're going up. How do we know we're going up? Because we see these giant blue candles. Then we see the little wicks, and then the retracement. Now this is the important thing to talk about when we're defining the retracements. The retracements are always going to have several characteristics, and these are important because when we see them, we know it's a retracement and it's not, the main move. Let me actually go to the daily here on this pair and see if we can find. Actually, we don't have a trend on the daily, but let's see here. Actually, let me go to the 4 hour and see if we get anything. I want to look for really concrete examples so that so it's clear what I'm talking about. Because if it's not, it's a little bit sketchy. You know what? Let's go to what's another chart that someone wanted to see? Pound yen. Okay, let's go to pound yen. Susan wanted to see the pound yen. Pound yen. Okay, and I'll go to 4 hour, and then I'll go to red, blue, red. Okay. Okay, this is another example of where the market was consolidating, and it looks like now we actually have a breakout. So we have these highs here, these lows down here. and the market's gone up. We don't know that we have a breakout. Remember, we have the non-farm payroll tonight. And for those of you that want to see Roberto trade the non-farm payroll, Roberto will have a webinar tonight for those of you that are interested in that. I'll put a link on the forum at nakedforexnow.com. If you want to sign up for that webinar tonight with the non-farm payroll, go to nakedforexnow.com and make sure you go to the webinars posted here thread. And under webinars posted here, I'll post a link for tonight's webinar. Or tomorrow morning if you're in the US. Okay, so this looks like it's a breakout, but the market needs to come back down and touch the edge of this box and give me a bullish candle, and then I'll say, okay, now we're in an uptrend. But what happens when the market's in an uptrend is there's specific things we see in a trend, and we know it's a trend. And these are what they are. First of all, the explosion move, the trend move, the candles are giant. They tend to be large, and they tend to have closes at the extremes. See how this candle closed near the high? This candle closed near the high? That candle closed near the high? That tells me it's an uptrend. Now what happens in the retracements is the candles get tighter, they get smaller, and they get more wicky. What I mean by more wicky is I mean that the opens and the closes tend to hover around the midpoint of the candle. Like, see these candles in here? You have all these little tiny candles here. They get really small. The opens and the closes are in the middle. You know, you get some wicks here and things like that. And then, all of a sudden, the market decides to make a new high with a big, huge, bullish, trending candle. There's one there, there's one there, there's one there. And then what happens again? The candles start to get very wicky. They start to close in the middle. The candles go from red, you know, over here you had almost all blue candles, and then you start to see more red candles here. So you see red, blue, blue, red, blue, red, red, blue, red, 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 blue. And again, the closes are not at the extremes on these candles. The closes are in the middle. Then we see another burst up. But this, remember, this candle, even though it closed on the high, it didn't take out this high over here. The high over here was 32.31, and the high on this one was 32.19. So it didn't take out that high. Again, we want to see a breakout like this candle. See how this candle over here, the high on this kangaroo tail looking thing, which it's not really a kangaroo tail, but this long wick, that high on that candle was 29.71, and this bullish candle closed at 29.97. So it took out the high and closed above it. That didn't happen over here because our high on this on this little wicky candle here was what? It was 32.31, and this candle closed here at 32.19. So it couldn't get above that point. And then it sort of consolidated around here, and then finally we get a big bullish candle here. It closes above. Now at this stage though, we actually have a new barrier, which is these highs right here. And you can see it did close above it just here on this candle, but then we see really this is the first bullish one. The market's back off to the races. Then it starts to go red, blue, red, blue, red, blue. A little bit of wick here, gaps up, comes down, gets a little bit tight, little tiny candles, then boom, takes out the high here with this bullish candle. And that is a very consistent pattern you'll notice over and over again, where you get strong bullish candles in an uptrend followed by mixed candles, little tiny candles, and then another strong bullish trend. Now, right now, I would say we were consolidating, and it looks like we just broke out. So perhaps during the New York session after the non-farm payroll release, we'll see the pound yen actually accelerate and go higher. It will first have to come down and touch the edge of the box, and then we would look for more pound yen bullish setups. So the next question. Is the sound still dropping out? Sound is good. Okay. Some people are getting bad sound. Okay. I think it's the people in New Zealand, which is weird. Okay. Susan says it's fine. Pablo says it's fine. No problem, says Mike. Jim says it's fine. Okay. Oh, Jim says it does drop out from time. Okay, if I move the mouse too vigorously, it's going to do it. All right. All right. Okay. So now, does everyone understand what I'm talking about here? So it's pretty. The concept is simple, which is here's how this is how I would do this right now on the pound New Zealand. Again, I'd wait for a breakout above this here, or down here and wait for it to retouch. But it doesn't have to be just the pound New Zealand. It can be any chart, really. We might even look at the euro. Here's the euro 1 hour chart. And I was going to talk about this one earlier just because everyone likes to trade the euro. And it's the same pattern here where you get bullish candles, then the candles tighten up. Does this, the question is, does this mean that the market volume is drying up? Well, we do know that if the market makes a big strong move, that there is volume behind it. And so it's not necessarily true that a tiny candle means low volume, but we do know that a big candle does mean big volume. So it's not, they're not, you know, you could get a lot of volume, but because you have about the same volume on the buys and the sells, your candle could be relatively tight and tiny. So it doesn't, but I understand your question, and it does. It does sometimes mean that when you see tiny candles, that yes, the volume is drawing up. And obviously, if we look at this chart, look at what happens. You know, a lot of these are happening during the Asian session. Little tiny candles here, Asian session. Then we see New York, and then little tiny candles here, Asian session. Little tiny candles here, Asian session, right? So again, little tiny candles here, Asian session. And again, today, little tiny candles during the Asian session, which is right now, obviously. So it doesn't mean that it's low volume, but it can mean that. And the big candles almost always mean big volume. And believe it or not, it doesn't take a lot to move the Forex market. I know there's a lot of, you know, talk about, oh, there's, you know, $3.7 trillion every day and blah, 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 and all this stuff about, or whatever it is, it goes up every year, how much money is traded in the Forex market and all that. But tick by tick, the volume isn't really that much. So if there's a big order that comes in at that particular instant, that can actually move the price quite a bit. So it's not all sort of, you know, it is obviously a liquid market and the largest market and all that, but you can move it if you put a large enough order in. Especially, you know, especially when other people are staying on the sidelines. That's funny, Susan. So, but how do you know when there will be a reversal? Asked Jim. Let's talk about this. So let's get into the nuts and bolts of it. So everyone understands what we know, how we know when we're in an uptrend and when we're consolidating. But how do we know when there's a reversal? Here's how we know. There's a couple of principles I want to get out here, and I'm going to give you an ebook too. If you guys want an ebook, I'm going to have a Facebook page out there, and I'll put this ebook on there for you. So if you guys are interested in the written rules for this, I'll give you more examples in an ebook format, and you can download that from Facebook. So I'll send out the link for that. The page isn't up yet, but when it's up, I'll send it out so you guys can get it. Okay, so here's the basic idea. One is trend is identified by large candles, right? And these trend candles close. These trend candles will close. Trend candles close at extremes. Okay? So at the extreme high for bullish trends, extreme low for bearish trends. The retracement candles are tiny. Oh, and the trend also. The third thing is trend candles are all one color. Depending on how you spell that, I know if you're in the US, you probably look at that and say, I misspelt it, but I didn't in Australia. That's the right way to spell it. And then finally, the retracement have tiny candles, and they're mixed in color, right? Retracements have mixed color, And the last thing is that the closes are near the midpoint of the candle. Retracement candles have closes near midpoint. In other words, they don't have the closes near the extreme high or low like we see with our trending candles. So the trend is identified by large candles. The trend candles close at the extremes. The trend candles are all one color. The retracements have tiny candles, and the retracements have mixed colors. The retracement candles have closes near the midpoint, and that's obviously in contrast to the trend candles, which they close near the extreme high or extreme low, depending on the trend. So that's the basic idea of identifying a trend. We also can say that a trend is not really triggered until the market breaks out from a consolidation. So, for example, if we were looking at this area here and saying that we've got consolidation with these highs here and these lows down here, we see that the market, depending on where we drew it, the market broke higher here, came back down, and actually it sagged into the box, so that wasn't ideal. Ideally, the market, it really depends on how you draw the level here, but ideally the market would have done something like that. Printed this bullish candle, this blue bullish candle here. The next candle doesn't trade higher, so that doesn't tell me that it's gone up yet. It isn't until this candle that the market traded higher than my bullish blue candle on the edge of the box. And now we're off to the races. That's the kind of thing I'm talking about on the pound New Zealand right now. I'd look for this sort of breakout and retouch, just like that. Okay, so now once we know we're in a trend, how do we trade it? What do we do? Stan says, if you're in Australia, how come you don't have an accent? Well, I do. I guess it just depends on who you ask. That's funny. Steven says, I hear an accent. Yeah, it depends on what it depends on what your home accent is, I guess. Okay, that's funny, Stan. All right, so these are the rules for trading it. First of all, I don't want to trade it unless I know it's trending, and I don't know it's trending if it's consolidating. And obviously, when it's consolidating like this, that's, I gotta wait for the breakout, the last kiss style retouch, and that's what we had right here. Now, right now, obviously, it's trending. So I've got a trending phase, retracement phase, trending phase, retracement phase, trending, retracement, trending again. Because why? It took out this high over here. It just today, actually, this high was right here on this little kangaroo tail looking thing. It took out this high today, and now it's in a retracement mode. Surprise, surprise, during the European session. So if I get another big bullish candle up, I would say, okay, the trend has resumed. So how can I trade this? One simple way to trade it is to wait for the market to top out during an uptrend and then wait for a bullish close above it. So for example, here is my high here on this candle. This one doesn't qualify because it's not as high. And then finally the market closed above it right here. So I could buy right there. I put my stop loss below the recent low, and I'm just saying it's taking out the last swing high, so it's going to go up higher. Stop loss down here, I'm buying right here, and it rockets up. Now maybe I already had a support and resistance level drawn back here. Let's see. This is at 35.90. Let's see what we have here. I don't think I'm going to have it at 35.90. It depends. I'm at the daily here. Maybe. But I'm not sure about that. And so I see the close above. I say, okay, the market's going to go. And then I have another example here. I say, now we're in retrace mode. Even though I'm in this trade, I'm still okay with it. I'm still okay with the fact that I'm going to draw down on this candle here. Because why? Because my stop loss is below the last swing low. And I know I'm in a retracement phase. So I'm waiting for the next explosion. And I can even have another buy setup right here. And another stop loss right here. Below that low. Below this low right here. Goes up. I get another move up here. It tops out right here. Retraces. It doesn't close above it here. But today it did, so that would have been another reason to buy. And I could put my stop loss just below the last swing low, which is right here. Now, some of you might want to be safe and put it down here, but you could just put it right here. Because what? If it takes out this low, then the uptrend's over by definition. Now, here's you can use any sort of trailing exit on these. You can scale out. You can add to the position as the market starts going. You can add to the position. Like, for example, once I take this trade right here, and then I took this second trade right here, maybe I move my stop loss to break even on the first trade. So I'm always only risking one. You know what I mean? And then over here, once it took out that buy right here because it closed above, then my stop loss is right here, right, where this shaded box is, okay? And guess what? Now I move my stop loss on all trades to this area right here, right? So that's the sort of thing. My stop loss thing is looking really weird. Let me delete it. Let me delete it right here. Yeah. Like that one. Yeah, so that's the kind of way where I can lock in profit. I'm only ever really risking one trade, and I get to add to my position. You know, the best pairs are the ones that are really trending, obviously, on this. And how do we know it's trending? Again, it's just the structure of the market. Now, how do we know when it's over? Let me talk a little bit about retracements. What tends to, if you look at the market as cycles, I haven't really talked about this ever before, and I think it's important. If you look at the market as cycles, what you will notice is that these retracement phases come in late in the cycle. In other words, if we look at a burst or a cycle in the market, which includes the thrust of the trend followed by the retracement, you will notice that most of the activity happens during the thrust and not a lot during the retracement. And that can come across in two different ways. The first is that the thrust can have more candles. And you can see here, if we count it from, say, this candle right here, the thrust had 10 candles, 10 1-hour candles, right? So you had 10 1-hour candles, and then you had a few candles here where it's sort of just falling around here. Oh, this is over the weekend, wasn't it? 25th and then the 28th, yeah. So this is over the weekend, and then it sort of falls down, and then you get another thrust here, and then it sort of falls down, and another thrust here. So it can be in number of candles that the thrust shows you that it's stronger, or it can just be in the number of pips. So, for example, this thrust here, if we count from this candle here, that thrust went up 111 pips. Now, what about the retrace? The retrace was only 52 pips. It went up 111 pips, and it retraced 52, right? Same thing here. This thrust, if we just count as a one candle thrust, it went up 54 pips. And what was the retrace? The overall retrace was only like 30 pips, right? Same thing here. What was this thrust? This thrust, overall thrust, was 95 pips, and the retracement on that 95 pip thrust upward was only 44 pips. So that's how you know that you're on top of things. You know, as long as those retracements are a fraction of the thrust, you know you're still in an uptrend. And obviously right now we still have that on the chart. We still see that this market is still going up. The retracements are still weak, they're tiny, the little candles, and until the market takes out the last low, we know we're probably still in an uptrend. Now another clue that will come in, and let me see if I can find this. We were talking about this on the Aussie yen. I think it was last month. Let me see if I can find it. We were looking at the 4-hour Aussie yen. Let's see if I can find it back here. Well, you know what? This is probably a bad chart. Let me go to my 4-hour. Devi wants the Naked Trading book. Devi, I can't give away that book. That book is published by, the Naked Forex book is published by John Wiley, and they don't even give me copies. So unfortunately, I can't give it away. Let's go to the Aussie yen. Okay, so here's the Aussie yen. Here you have the same thing: thrust upward, retracement, thrust, retracement, thrust, retracement, thrust, retracement. Now we're back in the thrust. Now, how do we know when the market's going to peter out? I think we were doing a webinar around here. I think it was this around these candles right here. And what you'll notice at the end of a trend is you tend to see really giant candles in the opposite direction. Probably my favorite example of this is one that I talked about in the Daily Trader. For those of you in the Daily Trader, let me go and find this. This is being the Daily. I talked about this in a recent video. It was the pound Canadian, and here it is. So let me get rid of all these. So here's the pound Canadian, and the market, you can see the market came down here before, and it touched this level at 56.50, and it bounced right there. Okay, and the market was falling, and it was falling rather quickly with these big red candles. It started to slow down a little bit. The candles got a little bit wicky, and then we saw this big giant candle right here. This big giant blue candle is a clue, especially when it's on a zone like this, that perhaps that trend is over. And that will often be the case. When you have a market that's running in one direction, and then the trend finally peters out, you will often see big bullish candles at the end of downtrends and big bearish candles at the end of uptrend. Here's an uptrend here, prints a kangaroo tail. That's a bearish sign. Here's a downtrend here, and the market prints a giant bullish candle. That's another sign. No, it doesn't have to go bullish after the bullish candle. It just would go consolidation, like it's consolidated here for a while. So that's exactly what I would be looking for on any of these charts. So let's say I'm in the euro pound. I say, okay, the euro pound is on a tear. Well, if I look at the euro pound daily, I see I've got thrust, a little bit of retrace, thrust, a little bit of retrace, thrust, and we're into that retrace mode. How do I know when the trend's over? When a giant red candle prints or a bearish candle tells me that the trend may be over. Here's a great example of that right here. Here is the big, let me zoom in so everyone can see. This is a big red candle after the market had been going up, retrace, and then boom, it took a big red candle. And once it did that, we know we're at least probably going to go into consolidation. That's exactly what happened. And you will see this happen over and over and over again during the strong trends. Here's another one. Uptrend, consolidation, thrust, consolidation, thrust, consolidation. Okay, now it's still going. Consolidation, thrust, and then boom. The clue, the big giant clue is what? The big red candle right here. That's a clue that this is over. Especially when it closes, and then it closed below these lows. Okay, it's definitely over, right? Same thing here. So now it's down, retrace, down, retrace, down, retrace, down. Okay, big retrace, big blue candles here, closing a little bit higher than some of these other ones did. Comes back down, can't make a new low here. Boom, giant candle. And for those of you who have the Naked Forex book, this is also a belt trade right here, isn't it? So that's another reason to take it. So basically, that is a great example of what happens at the end of the trend. And to me, and to my eye, this is very similar to what happened on the pound CAD with this double bottom action. So that's one way that we can tell that the trend is over, is basically we get a big giant candle in the opposite direction. So until we get a big giant candle on some of these yen pairs, I know we're really excited to see, how long can these yen pairs keep going? Well, right now we see thrust, consolidation, thrust, consolidation, thrust, consolidation, thrust, consolidation. A lot of consolidation here, actually. Another thrust back up. So until we get the big giant red candle or the kangaroo tail or something that tells us it's over, we have to assume that we're still in this uptrend. Mike says that an example of a thrust would be the Euro daily on the April, early May 2011. Let's take a look. Euro daily, early 2000, May 2011, April, May 2011. Yeah. Late April, right here. Yeah, so this is thrust. Well, you had it both ways, didn't you? You had a trend from Feb. You had thrust, consolidation, thrust, consolidation, thrust, consolidation, thrust, consolidation. Okay, big red candle. Get ready. Is it going to go here? It didn't. Okay, let's actually talk about this one. I'm glad you brought it up, Mike. I want to talk about this one for a couple of reasons. See this right here? Look at this sucker. We've got a trend here. It's going up and consolidate, up, consolidate. But guess what? We get this big red candle here. This looked like a little bit of a retracement here, or consolidation. But then it did this big red candle. Now, it didn't actually close down on the low. It closed a little bit higher, and that's why it has a wick, right? Compare this candle to this one over here, where the close is really, really close to the low. The close is 45.36. The low is 45.09. So that's about 27 pips away. This one, the close is 42.34, and the low is 41.56. So it's 22. Yeah. So ideally, when we see these end of the road candles, they close on the low or the high. And so the fact that the market did this thrust up here and then started printing these consolidation candles, we thought, okay, get ready, it may go higher. If it breaks higher than here, we're ready to go, right? Well, it never did. It actually broke lower, and then it even broke lower the next day. So now we know we're in a downtrend here. Downtrend thrust, consolidation, downtrend thrust, consolidation, downtrend thrust, and then back off to the races, going back up. Now it's just chop, 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 and we've been really choppy in this pair for most of the year actually. Hasn't really given us anything nice. Closest thing would have been from July, and also earlier in the year, I think in last year, it gave us a kangaroo tail. Maybe that was the kiwi I'm thinking of, but yeah. So now we're back off to the races. Thrust, consolidation, thrust, consolidation, consolidate, thrust, consolidate, thrust, and that's the euro right there. Oh, I was thinking of the Aussie. I was looking for a kangaroo tail on the Aussie. This is the euro. Yeah. So this is again a good example of where the market was consolidating here / retracing, and then it broke higher. We don't know that it's going to break higher until it closes above the high here. And it did that on this candle here, so that tells us it's back off to the races. Same thing over here. We didn't know that the market was going to go higher until it broke higher than this tail here. And it did, and it closed above it right here. Then it consolidated a bit, and then it got above this high. So as long as it keeps making new highs, we can keep getting in here. A really cool way to trade this is actually, let me pull up the 4-hour. A really cool way to trade these is to just wait for that big bullish candle. It tells you that the uptrend is going to resume. So you wait for the consolidation, and then you wait for the big bullish candle, like this one right here. Consolidation, bam, big bullish candle. Consolidation, boom, candle up. Consolidation here, boom, candle up. Consolidation here, bam. We just had that one. That was a 4-hour candle that just printed, So that's the kind of move. Now, I wouldn't really be jumping on this pair when we know that the non-farm payroll's around the corner tonight. But the easiest way to trade these is to simply wait for consolidation and then get in on the giant candle that takes out the high or the low and tells you that the trend is going to resume. That's the easiest way to do it. Very, very simple stuff. We're not using any MACD. We're not using any moving averages or stochastics or anything. We're just basically looking at the market structure. Very good. Yeah. Wasn't that reversal? Any other questions, guys? There's a few here I can go over. Let's see. Do you jam candles together? Asks Alexander. I think that means when you're Alexander. I think that means when you do like candle addition, when you add candles together. So if I get an open here on this candle and a close on this candle, then I say it's kind of like a doji because the market opened here and then it closed here. Is that what you mean? Yeah. Yeah, you can do that, but you can also download a tool on MetaTrader that will create like a 3-hour candle for you or an 8-hour candle or something. I've actually backtested. Susan says I've actually backtested the theory of entering trades on kangaroo tails and big shadows and exiting on kangaroo tails and big shadows in the opposite direction. And of course, entering in the opposite direction. I don't have the exact numbers, but it did pretty well. That doesn't surprise me, Susan. That doesn't surprise me that that's the case. So does everyone see what Susan's saying? She's basically saying she's just tested just taking kangaroo tails and big shadows as both entry and exit strategies. That's very, very interesting. I like the sound of that, Susan. That sounds pretty cool. Yeah, so are there any questions about this trend? Yeah, Vanessa says entry is to wait for consolidation and then enter on the close of a giant breakout candle. Correct? Yeah, that's right. Exactly. So, for example, let's take the euro right now. The euro right now. We know, okay, the high, let's say we're trading the euro. I'm just going to hit the F12 key on my MetaTrader and do this. So I'm hitting F12. I've got my breakout right here. How do you enter in the middle of the trend, asked Jim. Well, this would be an example. We know that we're in an uptrend right here, right? Big bullish candle. Here was our consolidation back here, okay? The market's broken out and it's going higher, all right? So we know we're going higher here. So the question becomes, when do we get in? Well, I got my high right here, so I need to see the market break out and close above my 35.86 high right here. If it does, I know I'm good to go. Okay, I get a bullish candle, so I'm getting excited. Maybe it's going to happen. But it doesn't. Big bearish candle. Uh-oh, is the trend over? Uh-oh. Up, back up. Maybe that was just consolidation. Still consolidating here. Ah, now I have a new barrier right here. So now I say, okay, if the market breaks above this long tail here and closes above it, I'm in. Up, nice big bullish candle. Now, whenever I see like a kangaroo tail style candle like this, and the next candle prints inside of it, like this one printed inside of it, what I mean by inside is it has a higher low than the low of the kangaroo tail and a lower high. It usually means the market's going to break out and go in the direction of the trend. In other words, whenever the market does this, the kangaroo tail doesn't usually tell me of a reversal. It doesn't highlight a reversal. It just tells me that the market's paused. And then here, oh, even more better. This is even greater. This is great. It's telling me for sure the market's going to bust out and go higher. Uh-oh, maybe not. Is it? Boom, and it did right there. So this would be my entry price, would be at the close of this candle because it closed above that kangaroo tail wick. So now where does my stop loss go? My stop loss goes down here below the last low. Now you might put it below this candle or you might put it below these, but basically you're going to put it down here. Some traders might put it all the way down below here, but I would rather put it under the recent low. And if you're not sure where the recent low is, the line chart will tell you. There it is right there, that little bend right there. Okay, so now I say I'm on this trade, and what am I going to do now? Well, it's consolidating. So my next buy order would be if the market closes above 36.22, I would get in, and then obviously what I would do then is I would move my stop loss to break even on this trade back here. So my stop loss would go right there. But I need to first see the market close above 36.22. And the reason I move my stop loss is I just want to have one trade of risk on at any given time, right? Yeah. But isn't that entering a little bit late into the trend, asked Irvin? Well, it depends, Irvin. It may seem late, and if it does seem late to you, that means that you're probably not a trend trader. Because let's face it, sometimes the market takes off in a trend and it just goes and goes and goes. Here is an example on the 4-hour euro-yen. Maybe when you got in on the 4-hour euro-yen trade right here, you thought, it was a little bit late getting in on the trend here. Okay? Whoa, wait a minute, let me find it. Maybe you say, oh, it's a little bit late getting in. So I had my I have my line in the sand drawn right here. And I said if the market closes above, and it closed above right there, right? Closed above right there. So I'm in on this candle. Now this one would have been stopped out because my stop would have been below this low right here. And the market actually took me out right there. So that would have been a loser for sure. But it broke higher, closed above, and tells me, okay, I'm off to the races. So now I have to wait for my next line. My line in the sand is this candle right here, this wick. Is the market going to break higher? Yes, it does. And it closes above. I'm not sure if it did on this candle, actually. Let's see. The close here is 107.12, and the high here is 107.12. Okay, so it didn't close until, what's the close on this candle? That's 107.11. So it's this candle right here that it does. Okay. So it closes on that candle. My stop loss now goes below this low right here. And now it may seem like, oh, I'm getting in a little bit late. But look at what happens. The market goes up from here. It goes up about 50 pips. It goes up about 50 pips. And it depends on how I manage my trade. I like to take partial profit and then trail the rest at break even. And many of you who follow my trades know that that's what I like to do. Not because I know that makes the best, the most amount of money, but because psychologically it's easiest to follow. And so we have another high here, right here, these highs, and the market finally breaks higher on this candle right here. So the stop loss will go all the way down here below the swing low, and then it's back off to the races. So it may have seemed like I was getting in late here, and maybe I took a loss or two. But as the market keeps going higher and higher and keep taking out these highs, although it may seem like it's a mature trend, obviously it kept going, didn't it? I mean, from that entry down there, which seemed like it was really, that's really far away and all that, from, the market's really, really gone. Look how far it's gone since that entry back here. It's gone over 150 pips. Irvin, what you're talking about is absolutely valid. You're absolutely right, Irvin, and that's probably another webinar. You're absolutely right. Absolutely right. Nothing wrong with that at all. Irvin's talking about retracement entries. I'm talking about a go with the flow sort of deal. You're right, though. You're absolutely right. Yeah. Any other questions? Yeah, this is breakout trading, exactly. This is sort of, how do I know we're in a trend? Well, we look at the market structure. How do I know when to get in? Well, we look for the breakout. And it's really about trend trading. That's all it's about. And what you're talking about is retracement, and that's really, sort of an aggressive thing. This is more for traders who are happy to sit and wait, sit on their hands and wait for the market to prove it's going to make a higher high and a lower low, that sort of deal. So it's just breakout, exactly. You got it, Irvin, exactly. Aussie Swiss breakout on the 4 hour. Let's take a look. This is one of your favorite pairs, isn't it, Jeff? Wow, cool. Okay, so here's my Aussie Swiss daily chart, and I've got a. I'm looking at this chart and I'm thinking this. To me, this screams for a buy. And the only reason I say that is because I have a zone drawn here at 94.60 where it reversed, and now we're here again. This, to me, is more like a whammy possibility. But I would need to see a bullish candle. Now, Jeff's talking about a 4 hour breakout. Let's see here. Okay, yeah. So this is what Jeff's talking about is he got consolidation, thrust, and now we're in consolidation. So you could definitely trade this as a breakout. I would just be wary of the fact that, going back on the chart, we see this 94.60 area pop up several times. So I would want to be, how I would trade this one, Jeff? I'll tell you. This is how I would do it. If I wanted to sell this sucker, I would wait for the market to trade lower and break out, and then trade lower and then come back up and print a bearish candle right there. Because I would assume that that would happen, given that this is such a strong level. Because my daily tells me that this is such a strong level of support, I would actually wait on a breakout for a retouch from below that zone. So it's okay if it goes lower during tonight, and maybe next week on Monday or Tuesday, the market drifts back up here, prints a bearish candle on 94.61, and I would definitely get in on a trade like that. Does that make sense? Yeah. That's how I would do it. For me, that's the bet. That's a safer bet. Now, alternatively, what we could get, and I'm glad you brought it up, if we get a big bullish move up today off a non-farm payroll, then I would say that this is a valid whammy setup. This would be a buy, and I could buy it and target 96.40. I'd put my stop loss below the low over here at 94.25, and I'd target 96.40. And then 97.15, and then 98.70 up here. So it could go either way, really. And the fact that it yesterday made a long tail tells me that the buyers did snap it up, obviously. It just depends on if today ends up being a big bullish candle, I would buy on a break of today's bullish candle. But if today breaks lower and closes lower, I would sell off of a retouch next week. If that makes sense, yeah. Yeah, so hopefully that makes sense. Yeah. Okay, guys, I hope that you enjoyed it. And Vanessa says, we know when the trend is over and to exit when retracements make lower lows or retracements move further than the previous move, correct? That's right, Vanessa. That's absolutely right. That's it. You got it. And look, I'll send you guys a link to the Facebook page so you can download the ebook if you want on this. If this is something that interests you. It'll have more examples. And obviously you'll get the recording so you can watch this as well. Thanks for your time, guys. I'm glad you like it, Rasika. Thanks, Rupert. Hope to see you guys tonight during Roberto's non-farm payroll webinar. Hope to see you there. Okay. Sure, I can do that, Susan. Thanks, Andy. Take care, guys. See you, Faye. Bye. Bye, Jeff. See you, Todd. Take care, everyone. Bye, Frank. See you, Paul. See you, Stephen. Thanks, Colin. Thanks for that. I didn't know that. Bye, Dodd. See you, Colin. Take care, guys.